It's time now for today's strategy session. The sell-off in the bond market showing signs of easing. Our next guest sees the 10-year yield falling back toward 4% after breaching that 4.2 level earlier this week. Joining us for more, we've got Gary Schlossberg. He is Wells Fargo Investment Institute's global market strategist. And Gary, it's great to chat with you. I wonder if you think the bond market is telling us that it's time to de-risk?
Well, I think so. We've had that backup in longer-term interest rates, and there is some concern that with that rise in rates, we could see a slowing economy. And so for a period there, the market may be facing some headwinds. We're already beginning to position, however, for that post-slowdown period. We do look for a growth recovery next year, and our strategy reflects that.
Gary, what does that strategy more specifically look like?
I'm sorry?
What is that strategy if you're positioning for that slower growth heading into the new year? What does your strategy look like? What are some of the positions or some of the changes that you're making?
Well, as I said, we're beginning to look beyond that. We're looking at more of the cyclically sensitive stocks, the sectors of the market, things like financial services, communication services as well, just given the inherent strength there, industrials, energy. Again, looking beyond that slowdown, we're staying away from the defensive sectors of the market. Ultimately, we'll be positioning for a shift toward neutral in small caps if that growth recovery materializes as we think it will.
When you look ahead to fourth quarter earnings for 2024, do you think that the earnings picture that we've already gotten so far indicates more growth heading into year end?
I think it does. The earnings numbers haven't been spectacular, but they've held up reasonably well. All this against the backdrop of an economy that continues to grow more rapidly than expected. Looks like third quarter growth could come in 3% or something north of that. And we did have good momentum going into the fourth quarter based on the recent economic data. Of course, we have the employment number out on Friday, and that could help tell the tale as well.
Gary, what is your assessment of the labor market right now, and I guess how that fits into some of the strategy moves that you are making? How worried are you about some of that softening that has been starting to creep up in those recent reports?
Well, we have seen some slowing in labor force growth, notwithstanding a very strong number for September that we had out last month. However, we do see the economy gradually losing momentum. We think the labor market reflects that. And all that is consistent with that mild slowdown that we're anticipating for the economy as we move into 2025 during the opening months of next year.
I want to end then on what you think about what's going on in gold right now, because we are seeing this gold rally, a little bit of a diversification away from the dollar. Is that about a concern about the potential outcome of the U.S. election? And if that is the case, how worried should investors be about any risk to the dollar as the global reserve currency?
Well, I think the dollar's position as a key currency in world trade and finance is pretty secure. There may be some erosion, as we've seen in the dollar's international standing, but this is really more evolutionary rather than revolutionary, we believe. Gold is being supported by a number of things. There is a little bit of concern that inflation still remains above target. The market is expecting still the Federal Reserve to be cutting interest rates. There are the geopolitical uncertainties out there. Gold really firing on all engines right now. And we could see a pause at times, but the underpinnings, we think, are still very much in place.
All right, Gary Schlossberg of Wells Fargo Investment Institute, thanks so much for joining us.
Thank you.